What if you could make over 20% return on investment in 20-ish minutes of your time and just giving it a couple of weeks to actually play out? Hello everyone, and welcome back to the channel where we are showing you that trading is as easy as you make it, literally on yourself. And that's exactly what we are doing. So in this 4-hour public swing trading experiment, the whole purpose is just to go over a couple of trade ideas using the same exact strategy I use in my morning trades, using the same exact strategy I do for what I do on my own as an independent trader. Of course, I'm looking at a few other things as well, but the strategy for entry itself is the same exact strategy I'm using. This week, we were able to catch, I don't even know, we're going to go over it in a few minutes, but I think 600-ish pips, 75% win rate. And I'm going to go over the risk to reward parts of each one of those trades. And of course, without fail, we've got 4 more trades to say, hey, if you know nothing about trading, or maybe you only know a little bit, or maybe you're kind of break even, or maybe you're kind of losing over and over again, I would just ask that you go to your demo account and take these trades, find your stop loss, use a consistent amount of risk on each one of these trades, and manage them in a way comparable to how I'm showing you or how we discuss, but make sure it's consistent. So make sure whatever management you're using on this style is the same as what you're going to use on the next week and the next week and the next week, so on. And see what your account looks like in 3 to 6 months. See what you can actually accomplish by just doing those things duplicatably, consistently, over and over and over again. Of course, we have to real quick click on the disclaimer that has to be up on YouTube. It has to be up every time I talk about investments. It's kind of a big deal. Please know that we practice high risk, high reward trading with leveraged money. Please know that you can follow similar steps with safer, lower risk, lower reward style tradings. You can use a regulated broker. You've got tons and tons of options at your disposal. It's 100% up to you. So this is your independent investment journey. Please take it seriously. So before we go to the charts, I'm going to go here. As you guys can see, I'm going to zoom in a bit. So far, we've got 13,000 pips. On average, it's about a 90% accuracy. Every one of these trades have been public, live on YouTube, recorded. So there should be a playlist with these videos in there. If you're saying, hey, wait, this chick is crazy, not possible, full of BS, I encourage you to go check for yourself. I say that because I want people to know what's possible, right? This is not my style of trading per se. Of course, I am following along these trades as well, taking them on my live account as well as a demo. Actually, I don't have these particular trades on a demo account. I'm managing in my own way, and sometimes I use automatic managers. But this is it. It doesn't take a lot. This video takes me longer to make than it would take you to go and actually take these trades. So if you're new and don't have a broker account, make sure you go to that link tree below, pick any one of those broker accounts, sign up with a demo account. It literally costs no dollars and no cents. After you've done that, play with the platform. You could literally do no wrong. You can't, there's no money in there. It's all monopoly money. It's paper trading, right? So click around, get used to the platform, get used to the software and the technology that you're going to be using. And other than that, follow along. When I'm saying, hey, we're selling EuroCAD or we're buying blah, 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 you go into your platform, you buy that, make sure you have a way to calculate your risk based off of what your stop loss is going to be, et cetera, so forth. And just follow along these trades and see what you can accomplish. So this week, actually more accurately, I'm going to zoom in. 2 weeks ago, we do this about every 2 weeks, giving these trades ample time to play out most of the time, in theory. The chef pairs still are not playing nice, but we'll talk about that in a second. 2 weeks, guys. Took this in about 20 minutes. We did this video. Got over 655 pips. Please notice that none of these are indices. 600 pips and none of them are indices. Something else I've added this week was kind of trying to keep track of potential or approximate risk to rewards. These were all based off of 2 fractals back to give you an idea with an ATR pad. But we're going to go over that here in a second. Overall, if you used the smallest lot size on most brokers, I know there are some differences. Some people have micro, mini accounts, etc., so forth. But in general, the 10 cents per lot per pip is about the smallest on a USD pair. Most people trade about $1, which is a lot more accurate. And of course, $10 is a standard. To give you an idea what these YouTubes are worth, and that's without compounding, that's without increasing your lot size as your accounts grow, you're looking at over $135,000. $135,000. Don't think I have the weeks calculator right. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. So we've got one more week. Your time per hour, seeing as how these are 20-minute videos, is still worth an awful lot per hour, to give you guys an idea. That's absolutely insane. Even on the very smallest lot size, you're saying that, hey, 20 minutes of this, you're making over $500 an hour. That's what your time can be worth when you actually learn this skill. And that's on the low end, just to give you guys an idea. But obviously really proud. My average risk to, well, in this case, my average loss to win size is about a 4.64 to 1. Hate to be the bearer of bad news, but it's not going to stay that high. The law of averages is going to make that come a lot closer down to a 3 to 1, 2.5 to 1, give or take. That's about what we see in our typical classes. So our all-time, I think, is 2.26 to 1. And let me zoom out. We've got almost 1 million pips, and I'm really excited. I want to have a party when we hit 1 million pips. This isn't that much time either, guys. This is just from 2021. All things, we do this every Tuesday and Thursday morning. We take live trades. We go over them together. The good, the bad, and the ugly. Sometimes we're barely hitting a couple of pips on that take profit one. But overall, we are knowing how to manage this. We're knowing what to do. Not all weeks are good weeks. We have losses and we have losing weeks. That does happen. We even had a whopper of a losing week a while ago. There you go. It's these, real life. But overall, all the way back to 2021, this is 2023 now. We have done some pretty awesome things. So, not going to spend too much time there. We've got a couple of trades open from this morning. We'll get UK US 30 and GBP USD just from today alone. And this year we're up over 250,000 pips. That's all in our private community. So back to what we're doing here. This is not bad at all. Averaging better than a 4, times the amount of that we're losing, right? 4 times, we're winning 4 times as much as we're losing in terms of pip count. That's not bad. But this risk reward is really going to make a difference. We're going to try to start keeping track of that a little bit. Before I click off of this and go over the trades that we did take 2 weeks ago, I'd like to focus on this. So please do take a screenshot, zoom in. If you have requests, demands, questions, please put them in the chat and I will go over them. But always, 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 since we're taking these as 4-hour trades, we're considering structure stop losses at the 4-hour. So that's very subjective from person to person, and we need something duplicatable that's going to transfer from my mouth to your ears, to your screen, to my screen, etc., so forth. What I'm doing is I'm always using structure plus a 1 ATR cushion for my stop loss. That's how I'm doing it. You can choose to use a couple of fractals back. That's very, very consistent and duplicatable. But if you're using 1, just know you're going to get knocked around a lot. Just know that if you have this big move prior to where you're entering, you're going to have a huge stop loss if you're using 3, right? So those are things you're going to need to ask yourself. And typically I like to have some kind of a cushion on there. It's up to you on what size. And the thing I added this morning was always make some protective action at 1-to-1 risk reward ratio. Now, we had some discussion about this in class this morning, and unfortunately, my video software stuff all glitched out, so lost some of that. Would have been great material to kind of get published to YouTube, but let's talk about it here and now. Remember, the take profits we discuss in our morning classes and or this 4-hour public trading experiment. I don't get to decide what your targets are. So for you, when you hit 25 to 50 pips, if you're not too comfortable with ATR yet, great time to lock, protect, trail, or scale some of your trade. There's tons of softwares out there that help you with this. You have tons of options, but at the end of the day, it's going to be up to you. I'm a pretty big advocate of scaling out of some of my trade, meaning if I have a standard, I'm going to close some of my standard and let the rest run. I'm a big fan of using automatic management, which means if I want it to trail using the 50 moving average and have it knock me out, if price comes near the 50 moving average again, I've got that option. If I want it to trail a little bit closer with fractals or with candles, I have all of those options because of the fancy dancy software I use, right? You may or may not have access to something like that. So for you, my suggestion is as you hit your targets, whether that's PIP, ATR, or risk reward base, you are always making some kind of protective action towards your trade. Which one? Because each one of these has pros and cons. Is going to be up to you. Locking profit is my least favorite because oftentimes when price goes down, what does it do? It comes back up to retest before it continues. So locking profit without having scaled or trailed anything, to me, is not the best, but it is an option. So always make sure you're locking, scaling out, trailing, or simply closing a portion or closing the trade as you hit some of your targets. And that's all I've got there. So let's go take a look at the trades. These are the 4 that we looked at on the 5th. We've got 4 more for today, and I'm excited. Let's go take a look. Okay, so remember, this is all just in an effort to show people that trading is not as complex, that most people are making tons of mistakes because they're overthinking, overtrading, mismanaging. They're all fluid and flunky in their lot sizes and they're wondering what's happening, right? They make emotional decisions. They're not considering all the psychology that goes into this. And they're all over the place. My only effort here with this 4-hour experiment is to show people that trading is really honestly possible for the average person You don't have to be a genius at math. You don't have to have a bankroll of bajillions of dollars. You can compound your money, and you can technically beat Wall Street. God, there aren't words. I have so many choice words in my head right now, but there aren't enough words to tell you what kind of industry you personally, anybody listening to this, has access to make and to compound the money that they have. You're well positioned, not even on Wall Street, to beat Wall Street 10 times X, say 10X, right? You have no idea what you have at your fingertips if you just don't over leverage, don't get over greedy, don't let psychology whoop up on you. Be consistent, decent management, viola, that's it. Ta-da, you're done. It's easy. So the 4 trades we looked at, I have right here in purple. Okay, 1, 2, 3, 4. Gotcha. And of course I have 4 more. I got a couple more that I wouldn't mind discussing, but tomorrow's FOMC, and I want to be mindful of some of the stuff that's going to happen. So I'm keeping it true to anywhere from 2 to 4 trades every 2 weeks. Again, the only effort here is to show you what's possible. That's all. So I'm going to start with the best one just because, well, I don't know if it's the best, but it's first on our list. So CAD Chef, we were looking for a buy at the breakout, right? We wanted the continuation before we took this trade. We didn't want to get stuck in all willy-nilly. Of course, this activated, it consolidated, not a lot of drill down, never came and made lower lows, and then it took off. It gave us a boatload of pips from where we entered, a total of 160, 70-ish pips. Not a bad way to be. So figure if your stop loss, okay, this was, I think, our 2 to 1 trade, is 1 fractal back, that's 50, plus you're adding that ATR cushion, which is 16 pips. That's about a 3 to 1 if you're using 1 fractal back, okay? Now, granted, even at 2, this is still the closer one. So you're not doing bad. It's actually 2 point something to 1. It's closer to 2 to 1 on this one. It's still not a bad way to be. You hit 1 to 1 risk to reward, and then you're scaling out and letting the rest run. You hit 50 pips, you're scaling out, you're letting the rest run. You hit 1 to 1, and you're like, hey, I've got my, 5%, for example, and I'm completely out of this trade. I don't want any more based off of how much you're risking per trade. Not bad at all. So that is one. I'm going to go ahead and remove this from our watch list. So I'm going to remove all drawings, and I'm going to take this off of our watch list, and that's gone. EuroCAD is next. Again, very, very beautiful. This one was an active entry. You can tell that by the solid line that's not perforated. We took an active entry right here for the slightly better. Of course, that didn't necessarily mean we had no drill down. It just meant we kind of really consolidated up, still failed to make a higher high. So we stayed within range. Beautiful, consolidated for a couple of days, made everyone freak out, I'm sure. And from the time of entry, this moved a total of 320-ish pips. Not bad. But figure your stop loss up here is 80-ish pips, plus you're adding that cushion. You're still better than a 3 to 1, 4 to 1 risk reward trade based off of wherever you're putting your stop loss. Because if you're using 2 to 3 back, 1 to 2, this is 2. This is 1 and 2. Fractals back to give you an idea. Again, not bad. Not bad at all. Figure you got your 50 pips. You're 1 to 1. You have now scaled, trailed, or whatever, and you're letting the rest run. That's a perfect, beautiful trade. We talked in class this morning. Let's say you took this one and 5% at 3 to 1. If you guys really have an understanding, even with you scaling out, you still got 10, 15% on one of these trades. You got 10% on another trade. You got 7% on another trade. Let's go to gold. Gold, a little subjective because we talked about this more as an idea than a trade idea. We talked about it more as discussion. But this is where we were at. We knew exactly where we wanted it to go from approximately the candle we were on, right, which is here, the candle after where the line is. This moved a total of 257-ish pips, give or take, right? Each one of these key levels are where we were looking for potential reactions. And I want to show this because I know 90% of people on YouTube are going to, whitewash this. It doesn't mean anything, but check this out. So we drew this line at the before. So before price reacted here, we had this level drawn up, meaning price reacted exactly where we anticipated it to react. Price reacted exactly where we anticipated it to react. And again, this you can't see the wicks, but I'll go back to the candles. Price reacted exactly where we anticipated it to react. That's the point of what we do in our morning classes. That's the point of being able to draw up your charts and mark up kind of what I call areas of interest. We knew where price was going to react all the way down. We knew what we were looking for beautifully, perfectly. And we talked about that on a video 2 weeks ago. If you're unsure, go back to that video and take a look. Overall, again, not a bad analysis overall, but that's that. Take that off of our watch list. All done. Really love that whole price reacting exactly where we said we would. Euro CAD, we already went over this one, but I did not remove it yet. And we've got one more. So take that off of our watch list. Last but not least is the chef pair. Listen, Linda, I have been off on the chef pairs and I have to put myself on that board because it's me. It's a me issue. I'm going to zoom out and make this pretty ugly. I'm still waiting for this to buy up. It's still not ready. Period across the board. Still not ready. So I'm going to zoom back in now so we can see. Actually, one more out. One more out. Again, looking at how we've consolidated, we're failing to make lower lows and over and over again. We are, 4 or 5 months into this zone. So this is from July. This is all the way back in July, you guys. We are months into this zone, 3 months, 2 months, that we have not really moved anywhere. We went up, we've come down, we went up, we've come down. We're making slightly, we're thinning out a little bit on our consolidation. That's all. But let's zoom in now. This is where we were at. Yes, this is active. This was an active trade, not perforated in either way. It activated. Here's our most recent fractal, and even this far back if you're going further. So this, unfortunately, is a loss. That comes with the territory. So figure from where price is at. You're looking at 56 pips all the way to 90-ish pips. I think I had this down at 89. That makes more sense. 89 plus the ATR cushion. So that's how many pips we lost on that. But again, going through just those 4 trades, if this was a 5% risk, you lost 5%. And you got 2 to 1 and 3 to 1 and 1 to 1, right? To give you an idea, your account is still up almost 20% based off of when and how you scaled or trailed out. Your account would still have made, based off of a 5% risk, which is the number somebody else gave me this morning in class, approximately 20-some-odd% risk. That is not a bad way to be in 20 minutes, okay? Remember, Wall Street is telling you that 10% a year is good. And that's after they take their fees, their cuts, and their, high tax rates or whatever to withdraw depending on what kind of account you have. This is not too shabby, as my mother would say, right? So, GBP, chef, bleh. I'm very excited about this trade. When and if it sets up, we're currently sitting at the 50 as we speak. But unfortunately, even as we speak, we've got a beautiful engulfing candle. We're still sitting and curving to the downside. I want to buy this. I really do. It's not ready for our call tonight. And I'm sure in a few weeks it will have already taken off. So my only advice on this pair is please do your own analysis and keep a lookout for this because I think it's a good trade. It's just not ready. It still wasn't ready. Months hasn't been ready. So you win some, you lose some. That's real trading. Let's take a look now. I've got 1, 2, 3, 4. I'm going to say FOMC is tomorrow. I trade in a way that my management really, for the most part, digests the news. Not perfectly. Sometimes the news knocks me on my butt, just like any other human being and any other trader or investor out there. But for the most part, I can handle the swings. I would implore you to make sure you protect your trade no matter what happens. Apply a stop loss, apply a trailing stop, lock your profit and or trail out of some of this prior to, an hour or so before that report comes out. And I think an hour before that, there's something else as well. So now that we went through all of those caveats, let's start with NZDUSD. We are in buyer's territory. Notice how I don't have it highlighted. Okay, I don't currently have it highlighted, but this is the one I'd love to consider for those of y'all who are interested. I like this as a trade idea. As we break and close above this fractal, I'm buying this all day. I'm buying it and protecting it 1 ATR or 25 to 50 pips. I'm protecting it at 1-to-1 risk reward ratio, meaning I'm scaling out of some, trailing some, or my management is kicking some butt for me. But no matter what, I'm definitely having some kind of protective, actionable step that protects my capital. So that's just a freebie just for y'all's consideration. Somebody please remind me next time to go over that one. Let's start from the left and work our way over. So AUDUSD, I have marked up the candle prior to the candle we're on. Okay. I'm looking for the continuation of this buy. I'm going to zoom out so we can see it. First off, we've got the JGS, the golden ticket is telling us that it's a good time to buy. Engulfing candle, we retested, we broke up, and we retested again, okay? I like the way this is set up. I like the structure of where it's at on the bigger time frame, and I'm looking to buy this pair. So figure 2 to 3 fractals back is still going to give us a really great stop loss. You've got a couple of options here. You can choose to wait to the break of this fractal. Going to give you a much more confirmed move, so a higher accuracy overall. But it's also going to give you a slightly later entry, which means a bigger stop loss. So you have to decide which one of those 2 methods you want to be at. And the hardest part is deciding and then actually doing that over the next batch of 200, 300, 400 trades. Because if you're not following the same thing 200, 300, or 400 trades over, you're not going to have a duplicatable result. So I'm going to choose in this case, because I know FOMC is tomorrow, that I would like to activate pretty quickly. So I don't want to wait till that fractal breaks. I'm going to make this perforated for pending, and I'm looking for a buy. Your stop loss is ultimately up to you. The ATR on this pair is 22 pips, which means what? Let's just draw this out for a second. I'm going to use, hold on, I'm going to use my cool tool. If I hit buy, and this little cool tool I've got over there lets me move this over. This is set to a 5% risk to give you an idea. I'm looking for a reaction in and around this range. So at that, that's an 8-to-1. Now, are we going to get that high in the next 2 weeks? That might be a bit of an ask. Okay. This is recorded, so by all means, mark this up. It's kind of awesome. Yeah, a little bit lower than that. A little bit lower than that. And tomorrow's FOMC, so we want to make sure we're protecting a little bit. I figure I'm looking for, in this range, is going to be my overall long-term target. Now, we're not there right now. We need the validation, so we need to break and stay above this high. So we need that impulse, gusto, full-bodied momentum candle, engulfing candle, a big candle, right? That brings us above and beyond, retests and closes before we come up to here. But let's just say for conversation purposes, we're going to put this below those last few fractals plus some room. So that gives us a risk to reward of about a 5-to-1, 5.5-to-1, right? And then I'm just going to keep working this down all the way. This is Australian USD. What if all we're going to get is to this range and we're not going to get much further? Well, here I'm going to do two scenarios. What if we know tomorrow is big news, so we really want to give this big room? Because our major target is all the way up there, our risk to reward ratio is still pretty close to a 3-to-1. Not bad, right? You have that option. If we want to say, hey, look, I still like my stop loss kind of in this 3 fractal range. Whoops. Please forgive my mouse. It's been an all-day issue with this. I have been the issue all day. So let's say I want this right here to say still within this range, give it a little bit of a pad. And I will want that tighter, okay? But let's say now we're only getting up into this range and kind of breaking and making a slightly higher high. What is that risk to reward going to be? Risk to reward. Let's give us a second to digest an update. That says 3-to-1. I think it should be a bit more, but I might be wrong. Let's see how quickly this updates. No, there we go. So about 3.5-to-1. What if we're only coming to break this level and that's all we're getting? You're still at a great risk to reward ratio. So overall, great trade, great way to be. I think this is a really awesome trade idea. Please consider taking it on your demo account and just tell me in 2 weeks, hey, how did this play out for you? How did you manage it? Next, we've got 2 Australian pairs, and I try not to double dip in terms of a currency too much. That's tricky. But I'm going to stick with it because it's the one I've got marked up. So, Australian NZD. This one is going to be a little tricky because I'm not going to take my entry until after we break this fractal. I'm not going to take the risk. I'm going to zoom out and show you what this looks like overall. I'm looking for a sell idea. Okay, our golden ticket, our strategy is telling us we've got the sell idea. We've broken out and that's awesome, but we're still kind of respecting this trend line. So overall, I'm not expecting a lot on this trade. I'm just saying it's worth my risk to reward. That's kind of how I'm looking at it. Do I think that this has the room to continue to push up? I really do. So that's why I'm going to be super mindful and careful of how and when and if I enter. So let's zoom out. I need to go ahead and put this vertical line right here, because if I don't, it's going to look like it's already activated, huh? So we know that any activation beyond this price point after this time, after this moment, I'm going to be willing to sell this. Just to show you what that risk to reward looks like now, I'm going to zoom out. I'm going to hit S. Whoopsie. Here we go. Of course, I messed that up. But you guys get the idea. So figure I'm looking for action to at least break this level. This is only giving us about a 2.66-to-1. So this is not the best of all the trades in the trade box today. It's not. So you have to decide, is it worth it? Or do you want to go to a smaller time frame and wait for a slightly better entry, which is going to give you a better risk to reward? Tons of options. I'm just going to keep this on the table because I think it's got some room, a little bit of room to the downside. I'm not anticipating getting much more than 1.5, 2.5 to 1 out of this trade overall, but I still think it's worthwhile. So That's that CHFJPY I've been looking for and looking at for a very hot minute. I'm going to zoom in. I'm looking for the sell on this, okay? So as we break below and stay below where we're currently at, that price point is 164.53. Again, that's 164.53. I'm always rounding because that's how I have to type in those numbers myself. Take a look. So, whoopsie. Let's say my stop loss is pretty, and I moved that far away intentionally. I'm looking to come down and retest this area, okay? That's pretty darn far away. Our risk reward is definitely not bad. And that's, extremes on both ends. Let's bring this to the actual most recent fractal levels real quick. And let's bring this only up into this range to say, hey, I'm looking for price to come into here. We're still up better than a 2-to-1 risk to reward ratio. I overall think we're going to be dropping much harder. We're just not, we haven't done so yet. So looking for at least that 2-to-1, not too bad at all. I am selling this. I'm actually already in a sell, and I'll take another sell at the same exact price point as you guys. That's CHFJPY. Last but not least is silver. So silver, let's go ahead and I'm going to hit my B button to show you. Figure my stop loss is going to be here, along with this fractal plus a little bit of room. I'm looking for a reaction all the way up into here. If I break and stay above this, so I break, I retest, I do all the things I need to do. So not just reject and sell back down. I need to break and retest and continue. I think this has a lot more upside potential than even this, but that's about a 4.8-to-1 risk reward potential using approximately right here. So remember, you're not going to get exactly these things, but at those ratios, even if you lose one of those, if I had to make my wager, it's going to be AUDNZD. Either way, you lose one of these trades, any one of these trades, you're still going to be making anywhere from 10 to up to 30% based off of those risk rewards and based off of how you're managing. So I hope that these videos are helpful. I hope that they're showing you don't have to overanalyze. You don't have to spend 19 hours in front of the computer. You can still make tons of money. It's just a matter of making this work for you on your timeline, using the same strategy, using duplicatable management, and not making all those really small nuanced mistakes that make people lose all the time. So happy trading, a happy Tuesday. I hope you guys do something incredible in the next 2 weeks, and I'd love to hear about it in the chats. And I hope you guys all have a beautiful week. Take care, and God bless.